Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Getting Started with Thinkorswim. And today we're going to be talking about a tool that, for whatever reason, it seems to be the one when I bring it up and demonstrate how it functions, it seems to carry that wow factor, particularly for those who do options trading. We're going to be talking about Thinkorswim's very powerful risk profile tool. We're going to be profiling the reward and risk potential of an option trade, really breaking it down using that tool. Really looking forward to this discussion. Before we can get to that risk profile tool, though, let me first of all say hello to everybody that's already chatting in. Great to see so many familiar people out there on YouTube. Hi there, Will and Eva, David, John, Ricebird, Lawrence, and everybody else. Thanks for joining us week after week. I really do always appreciate your attendance and your contributions to these discussions. If you're here for the very first time, welcome. Glad to have you on board. And if you're watching on the YouTube archive after the fact, well, enjoy the presentation. Be aware that you're invited to join us in this live stream discussion. If you'd like to be here as a live stream audience member, we kick things off on Wednesdays promptly at 2 o'clock Eastern. We'd love to have you here. And I also want to let everybody know that my very good friend Kevin Horner is joining us in the live stream audience chat area. Kevin's going to be addressing any questions that I can't get to just during the flow of the presentation, but Kevin is a fabulous resource to have here. Thanks for having my back there, Kevin. And Kevin and I would like to issue an invitation to everybody watching. If you have an account with X, give us a follow there. You should be following your favorite presenters on X, because it's an additional resource, best place to connect with your favorite presenters. You can follow Kevin there at Kevin Horner CS. And you can find me on X at Cameron May CS. But let's get into this discussion. Of course, as we talk about trading tools, especially, and particularly those that support the effort of options trading, well, we need to discuss risk as well. These disclosures are important, so bear them in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Options carry a high level of risk and are not suitable for all investors. The paper money software application is for educational purposes only. All investing involves risks, including the loss of principal, and any investment decision you make in your self-directed account is solely your responsibility. All right, so let's set the agenda for the day. We're going to be talking about this tool called the risk profile, and really what it attempts to address is for an options trader, when they're about to place a trade, there are lots of things that they might want to know in advance about that trade. How much can it make? How much can it lose? What are the odds of success or failure? Where does it break even? What variables might influence that trade toward success or failure? All of that is actually captured very nicely on the risk profile tool. So we're going to have a look at the markets very quickly, set up an example option trade, again, pretty quickly, but spend the bulk of our time on that risk profile tool, acquainting us with all the features that allow a trader to break down not just an individual option trade, but also that can be extended out to an entire portfolio. So really cool tool. But let's go right to the Thinkorswim desktop software platform and look at what's going on with the S&P 500. It's been a nice rally day, up about 1.9% on the S&P, but kind of interesting. If we look at today's candle high, it's pretty similar to highs that we've already seen several times over the last few weeks. And it's just below that $5,500 level. I think that could be a number of technical traders who are paying attention to that level. Not everybody sees things through the same lens. This is just one observation about the S&P 500 chart. But that $5,500 level served as a pretty good price floor for about a month, and now for about another month, the second month, it's been a price ceiling. Let's say that our trader here who's setting up an example trade that they want to break down using this risk profile tool, maybe they think that the S&P is just likely to struggle for a little while to get above that $5,500 level. And so maybe they think that we've gone as high as we're going to go in the near term, and if we were building a new trade for maybe the May 16th expiration, let's suppose our trader thinks it's more likely that stocks in general will be lower at that time than higher compared to where we are right now. All right, now time will tell. We'll see if that's what actually happens, but let's say that's our trader's stance. And so maybe they go look for a stock to trade. And for today's example trade, we're going to use Nike. So bring up Nike. I'm not wearing Nikes right now. Apparently not a lot of people are, because Nike's been struggling. A couple of big gaps down over the course of the last year. And you'll notice on this most recent gap, we gapped down below $60. And despite some pretty strong intraday efforts to get back up above 60, haven't even seen it trade above 60 one time in these last few weeks since that gap down. And today we did get up to, what was our high today? 59.20, but we sagged back down away from that, a couple of bucks away from that level. So let's say that our traders' convictions here are, looks like the markets are set to struggle a bit. Maybe their conviction is that Nike is set to struggle even more, just continuing its struggles. But in any case, they think that the stock is likely to stay below $60. So let's say they settle on doing a bearish option trade that benefits as long as the stock remains below the $60 level, and especially as it gets toward that May 16th expiration. So let's go do a bear call spread for our example trade, and then we're going to break it down using that risk profile tool. So I'm going to go to the trade tab. Let's go out here to the 16th of May, since that was just the time frame that we were discussing. And let's stick here in the left column for a call trade. And let's see, our resistance was up there at 60. So what if we were to sell a call at that 60 level? So that benefits if it expires worthless. If the stock is below 60, that's the objective there. But then to define the risk on the trade, let's hit our control key and click on the ask price for, how about the $62 call? So what we're doing here is selling the $60 call, buying the $62 call. Looks like that might retrieve for us a 56-cent credit. Let's say we're willing to settle for 55. Let's just try to lock that in. So there's our trade. Now, for those of you who are familiar, could we get 60? Forget it. Anyway, for those of you who are familiar with a bear call vertical spread, we know that the way that we've structured this, we like the stock to be below our two strikes as we get toward our expiration of the 16th of May. So we'd like to be below $60. If we can do that, there's a 55-cent credit that might be retained as a potential maximum gain. It's a $2 wide spread, which means $2 minus the 55 cents that was collected up front leaves $1.45 of risk. All of these are elements for an options trader who's familiar with the strategy. This is all just top of mind sort of stuff, but there are other questions that extend beyond that. Well, what's the likelihood that we're going to be below 60? What if I don't have the math in my head yet for calculating max gain and max loss and break-even points? And what are the chances that we're going to be above 62 and in max loss territory? Oh, there are lots of questions. Well, let's analyze this trade and see if we can get some of those answers. Now, I will say, as we go to this risk profile tool, I get requests in the chat window all the time. When I'm doing an option trade in particular, people say, hey, can you throw that onto the risk profile? Can you put that on the Analyze tab? And I usually don't. Here's my reason why. In my estimation, this is just my opinion, the Analyze tab is almost too good at what it does. It can just give us, we can create any sort of trade combination and then just click a button and it tells us how much that trade can make or lose, or where the break-even points are and the circumstances that might cause losses or gains. All of that's fantastic, but it's kind of a shortcut. I think it can stunt the learning. A trader really should have a pretty good feel for calculating all that stuff on their own. So I'm always a little bit reluctant to use this tool when demonstrating trading concepts, because to me, it's kind of like if your grade school math teacher, sorry, we're not grade school students here, but if your grade school math teacher were to say, here's what 5 plus 12 is. Well, they'll teach you how to run the numbers yourself. What if they were to instead say, here's a calculator, 5 plus 12 equals, oh, it's 17. That's nice. We don't know why it's 17, but it is 17. The calculator's correct, but it can stunt the learning of that student. That's why you'll see me not use this tool, because it's such a good calculator. All right, but we've all moved beyond that. So yeah, this discussion is going to be for those who are familiar with options trading, but it can still be a great tool. Even as adults, we know how math works, and we all love our calculators now, right? All right, so let's go to that tool. And the way that by the way, when we've created a trade, before we submit that trade, we can analyze its elements by right-clicking on the trade, and let's select Analyze Trade from the pop-up menu there. There we go. That takes us right to here, what I call, it's just like a trade calculator. So let me explain the elements of this tool in just a second, but first of all, I noticed there's been a survey link that's been added to the chat window for the live audience members. So if you're here in the live audience, click that survey link right now if you would, and have that ready to fill out for when we're done with our presentation. That's when you can give me some honest feedback, but I'll tell you a couple of things about that survey and I'll make you a promise here. Number one, that survey is really short. Just 2 multiple choice questions, then it has a comments box and a suggestion box. So you can fill that survey out. It literally just takes a minute. But the thing that I want to promise you, that number one promise, is that that information goes to me. So it goes to who you would think, well, it's gathered and then presented to me. Same thing. Anyway, but I get that information, so it's not squandered effort, and I promise I'll read through it. So I read through that data, I read through your comments, and it always helps. All right, so thanks for doing that for me, but let's go right back to our tool here. And we're going to examine this sort of step by step. First thing I want to look at is this chart up here. Then we're going to look at the variables down below. We're going to start to play with things, learn how to customize this tool. All right, but probably the key, I don't know, is it key? Yeah, I think it's probably the most commonly used element of this chart are these 2 lines. So in order to understand these 2 lines, this golden line and this blue line, we have to understand the grid that those lines are drawn on. So you'll notice that we have a y-axis or a vertical axis here, then we have an x-axis or a horizontal axis. The y-axis, the vertical axis, tells us the potential range of profit or loss for the trade that we have charted here. So this is our vertical spread. Now, across the bottom are a number of potential stock price levels, going from, in this case, from $49 up to about $66. With this line right in the middle, see where it says $57.59? That is the current price of the stock. Now, these lines are basically an intersection of profit or loss and price levels. So let's focus on this golden line first. This is our potential for profit or loss at different price levels at expiration. That's key to understand. So if you're putting on a trade and you're wondering, well, if I put this trade on and just let it go to expiration, I wonder how it might do if the stock went up or if the stock went down. That's just what this shows. So notice up here, our highest horizontal golden line. This is our maximum gain line, and you can look at that down here in the lower left. It says 5/17/25. Hey, that's the expiration for our contracts. So come 5/17/25, how might this how much could this trade make? Well, it's a 55-cent credit on 100 shares. That gives us $55 that can be made. Now, tell me, guys. I know sometimes the contrast between the font there and the background in this little box isn't very strong. Can you see those numbers? 5/17/25, and it says $55. If you ever find yourself you can't see the contrast between the colors, you can right-click on that box and choose a different color. So you'd right-click right here on the color that we're intending to change. And let's say, for example, we just go with this sort of darker red color. Is that making it any easier to see those numbers? Notice it also changed the line color so you can see that those two are associated. Anyway, so now I can see $55 is the most that I can make, and that's really at or below, this is a bearish trade, any price at $60 or lower. Ricebird, you'd like to see that can be changed? Yep, nice little feature there. Little things like that we learn about these tools can be really handy. Well, yeah, this is a bearish strategy with a $60 lower strike, so that's where our profit is optimized at expiration. Where are our losses realized at expiration? Well, that would be above our upper strike, or $62, that's over here. And you can see that's where our loss line bottoms out. And how much can we lose on this trade? We have $55 that can be made down at the bottom, $145 that can be lost. Now, in between the $55 potential profit or the $145 loss, or in other words, between $60 and $62, well, we must not be at maximum gain. We must not be at maximum loss. And yeah, if I position my cursor, let's say at 61, that's in between. It's in the middle. I didn't get it exactly on 61. That's okay. But that's in the middle of our vertical. At expiration, that doesn't produce max gain. It doesn't produce max loss. Just where I've positioned my cursor there, it looks like we're at about a $56 loss. So really it depends on where, whether we're closer to our maximum gain or closer to our maximum loss. But this is a nifty little line that can spell out very quickly. You can see how it's a calculator. It's like displaying it for the grade schooler. This is how the thing can go. Now there's another line right here intersecting with 0. That's the break-even point at expiration for our trade. So notice that's coming up 55 cents short of max gain. If I put that right at the break-even, that's at $60.55. That is 55 cents above our lower strike. It's a bearish trade. We prefer to be below that lower strike. 55 cents above means we haven't accomplished our maximum gain. We've actually broken even. So that's what this line represents. And by the way, if you ever hear reference to a hockey stick chart, that's what this is. It's generically referred to as a hockey stick because a hockey stick kind of is shaped like that. In this case, it's like somebody took two hockey sticks and taped them together in the middle, I guess. So what is this blue line? Well, this blue line answers the question, well, how might this trade do at some time other than expiration? Because it's nice to know how the trade could go if I just put it on and let it run. Well, what if I put it on and let it run for a couple of weeks and it starts to move in the right direction? I want to take some profits. How much might I have in profits? And what if during those couple of weeks, volatility were to rise or price were to shift? That's what this blue line addresses. So by default, this blue line is just going to be showing how this trade might benefit or lose by movements in the stock price today. So notice down here, there's a date that says 4/23. That's the date for which this line is currently drawn, and it's just mapping out profit or loss scenarios. Well, let's suppose our trader thinks, well, what if price well, I wonder how this trade might be going, not all the way to expiration, but let's say we got halfway there. How many days are left on this trade? We have, my place is 23 days. Okay. Oh, it's not where I wanted to go. Let's pop back here to our risk profile. Anyway, let's go halfway to expiration, be about 11 days from today. Today is the 23rd. So there's April 30th would be 7 days. Let's go out to maybe over the weekend. How about May 5th? So if I change this to May 5th, my line has actually changed a bit. Actually, and I might have done that actually, maybe an easier way to see this happening. So we can make the change using a little calendar. We can also just use the plus and down arrows here, the plus and minus arrows, not plus and down. So let's kind of peel back to today. And what you'll notice is I advance each day toward the 5th of May. My little blue line is changing, but also my break-even point is shifting on this trade for each day. So what it's doing is that actually our profit potential is starting to look more and more like the expiration profit. Our loss potential is starting to look more and more like the expiration loss potential. And so it's sort of conforming, it's molding itself to this expiration line. So we can just sort of pause. Let's pause on May 5th now. Oh, and RG says, should the date, RG, you're getting a little bit ahead of me. I will be talking about this. So RG is asking about this date up here. It's different function. I do want to explain it though. But let's just set this to May 5th, and now the trader can just ask themselves the same question. Hey, I wonder how my trade might be doing. With the stock right now at 57.69, how might my trade be doing if the stock, I don't know, continues to fall, goes down to 56? On May 5th, what's our profit? If you look over here on the left, let's go to 56 bucks. About $23. So 55 is the maximum we can make. We can see that there. We'd be about not quite halfway there on May 5th. What if the stock were to rise? Well, even if it rose from where we are right now, we're still making some money. Notice the little blue number here. Still a little bit above break even, and then we hit break even for May 5th right there. That's because the stock's already where it needs to be, and it's actually gotten closer to expiration. So that's moved the break even up a little bit, built in a little bit of buffer on this trade. But if we start to rally too much, then we're slipping into loss territory on that May 5th projected date. So this is a nice little tool that allows us to just construct a profit or loss scenario for future dates. It's building in the element of time decay. Now, that's not the only element that can have an influence on how a trade plans out. Let me give you a quick question here. Since this is a credit spread, we're net sellers of options on this trade. What might happen if volatility were to start rising? We've had a lot of volatility in the markets recently, right? What if that volatility started to climb back up? How does that conceptually impact a trade where a trader's already in a short option position? Well, sellers have a preference for volatility levels to drop. Typically, that brings prices down. That's what they want when they're trying to exit at lower prices. So if our volatility were to rise between, let's say, now and the 5th of May, that could actually slow down profit accretion. It might actually create losses. But here's a volatility adjustment tool right here. Let's just start hitting the plus button. Let's make an assumption that volatility does rise. And what I want you to keep your eye on here is what's happening to our profit line and our loss line. Our loss line likely to deepen. And you'll also notice our break-even line here is moving, it's shifting. Now, yeah, volatility, rising volatility drops the profitability of short options positions. So now if I look at the same intersection, different prices, wow, a similar price move on the stock has produced a smaller profit on my contracts because of that volatility drop. Now, or because of that volatility rise. If volatility drops, that can accelerate profits. So we can play with time variables, but also volatility variables, and then intersect those with price. And now we're accounting for all three of our variables that can influence the success or failure of an option contract. Now, Damien says going between the two is a little chaotic. I'm not sure what you mean by the two of, oh, let's see. You're new to Thinkorswim and trading. You're trying to learn how to trade. Okay, we don't go into futures in this webcast, so I won't be able to address that to any extent. Nor can I can't get into that question that you've thrown out here, Damien. My apologies. It would take this discussion too far off track, off topic. But in any case, yeah, talk about going between the two of, I know your question is different. If I were to hop back and forth between broad subject matter like that could really confuse things here. So my apologies. I'm going to have to leave that one for a later discussion. Maybe what you might want to do is keep checking. If you have an interest in that, maybe check out a related webcast on our YouTube channel. This goes for everybody. If you have an interest in some other topic that I just don't happen to be addressing today, it might be that, it might be technical analysis, it might be stock trading. But first of all, make sure that you're subscribed to our Trader Talks channel on YouTube. You can do that by going down below the video stream right now, clicking on subscribe. It doesn't cost anything, it only takes a second. But this is where you can find our playlist for all of our other webcast series. Of course, you can join our live streams here as well, But if I go to playlists and I start to scroll down, then I can see discussions of a huge range of other topics, yes, including spotlight on futures, just using other tools and techniques. So I'll just leave that there. But let's come back to this tool. So now we've acquainted ourselves with this profit and loss line. We now know how this profit and loss line works. Let's talk about some of the other tools. The next tool is going to be these price slices. So who was it that asked about the date up here? Somebody asked a good question. Shouldn't that date? Yeah, RG says, shouldn't the date up there be 5/17? Why would RG say 5/17? Well, that would be the day of expiration for these contracts. Let's come up here and change this date, and then I'll tell you what that does for the trader. So let's change that to 5/17. When a trader puts on a trade like this, in this case, we have a trade that benefits as long as the stock is below a specific price on a specific date. In this case, it's that third Friday of May. I wonder what the probability might be that we're going to be below $60, for example. Ooh, or if we're trying to avoid risk, I wonder what the probability is that we're going to be above 62, or what are the chances that we just break even on this trade? Well, up here we can set our date to the expiration for our contracts. We typically set it for the day after displayed here. And then that gives us some percentages here. And they're associated with these lines. So these lines, we know that the middle one is the current price of the stock, but these are called, generically refer to these as slices. Notice the word slices right here. It's because they're kind of slicing the chart up into quadrants. This slice is current price of the stock. This slice is 10% below the current price. This slice is 10% above the current price. And if you're wondering, isn't that kind of random? Do I care if the stock is 10% above or below the price? Yeah, that's okay. Those are just sort of convenient place markers. Most commonly, the trader will start to move these slices around to areas that are more important to them and to their trade, okay? But associated with those slices are these percentages. These are probabilities that the stock is going to land on a given date. In this case, it's this date, May 17th, within certain price ranges. So, for example, there's about a 34% chance that on May 17th, our stock will land somewhere between the current price and between 63.39, which is 10% above where the stock is right now. There's about a 15% chance it overshoots that, goes higher than that. So if we add those together, what does that work out to be? About just north of 50%. Just north of 50% probability that we're going to be above 57.61 at expiration. Well, there's also about a 50% chance that we're going to be somewhere below that at the expiration of these contracts. Now, there's another percentage that's displayed, but not expressly on this chart. Notice there's a gray area that's surrounding the current price. And that gray area is drawn to show a 68% probability. What this is saying is on May 17th, there's about a 68% chance that we land somewhere in here, that gray area. Why 68%? Well, that's known as one standard deviation. 68% is a mathematical determination of the likelihood of something falling within a certain range, and the typical starting point is one standard deviation or 68% probability. So that's what this gray area means. So that's good. Whether the trader uses that as their specific probabilities or not is fine. But an important feature of these slices is that they can be moved. Watch this. I'm going to do this. We can either move them manually with a click and drag function, or we can move them numerically. So let's say, well, we have 3 points of interest here. We have maximum gain, we have maximum loss, and we have break even. So let's just start moving our slices. Let's take this one, and maximum loss might happen if we're above 62, so let's just move that slice to 62. We have break even right here, 55 cents above 60. So let's move this to 60.55. And we have max gain at 60. So how about we pull that one over here to 60? Right there, close enough. Notice I got it within pennies. I nailed this one. Close enough. But this can tell a trader the probability of outcomes for this trade that they've built. So come May 17th, there's about a 69% chance that our stock will be below $60 and we'll have our 55-cent gain. That's why we've topped out here at that $55 profit level at or below 60 bucks. Now there's about a 3.3% chance that we make some money, but not maximum gains. So we're somewhere between break even and max gains. So we could actually tack that on if we're just asking the question, well, what's the chance that we'll make some money? Maybe not maximum gain, but maybe maximum gain or at least a little bit. Well, that's actually about 72%. Now, there's about an 8% chance that we lose some money, but not maximum loss, and about a 20% chance that maximum loss is realized at expiration. So these slices are kind of nifty, and we can just move them around just like I did. You just click and drag it into position, or you can actually come right down here and change those slices. If I want to be a little bit more precise, let's change this one to exactly 62. Let's change this one to exactly 55. And as I do that, notice that our values on those slices change to be more precise here. So our slices are displayed graphically on the chart, but they're also displayed numerically down here. And I do want to talk about this slice functionality in a little bit more detail as well. But that's another quick way that our trader can get a better look at their chart. Now, a couple of other functions. This is sort of a preference thing. Let's say our trader, you notice there's a lot of, okay, I get it. That, yeah, if we're below $60, I'm at maximum gain. I don't need that to be displayed for 59, 58, 57, 56, 55, 54. It's just using up a lot of unnecessary real estate. Well, this chart is actually resizable if we need to. We can click on the numbers at the bottom and pull them to the left to contract that and actually create more space, or we can pull to the right and expand that space, and now click on the chart itself and reposition things. So yeah, traders will sometimes do this, especially if they just want to get a closer look. They have multiple legs and they want to get a clearer view. So pretty cool tool. So we're learning a lot about this tool. Now, I'm going to do something here. It's going to make us nervous. I'm going to hit some reset buttons here. I'm going to come up here, click reset. It's going to say, Cameron, are you sure? This is going to reset the page to the system default. Any unsaved adjustments will be lost. Are you really sure you want to proceed? I'm going to click yes. And you see what that just did? Set our slices back to current price, 10% above, 10% below. It set these that I had changed manually to 10. It shows the current price, 10% above and 10% below. And down here, we're back to the present date. So I just reset everything. Don't do that if you want some of the functions to remain the same. If you just, let's say you wanted to reset just the slices, that can be done here. Or if you just wanted to reset the changes that you made down here, that can be done right here. Reset the parameters and the date. Oh, and one other thing I do want to point out, if you're not seeing the volatility adjustment, that doesn't always display by default. It can be hidden. You might need to click on the little gear. Let me show you that. So if you're looking at yours and you see, well, I can see the date adjustment, but I can't find the volatility. It's just not there. That's because it's a custom functionality. If we click on that customize tool, there we go. Now we can see that volatility adjustment. All right, now we've talked in pretty good detail about manipulating things manually up here and seeing things visually, but I do want to talk about these numbers for a bit and show maybe a different way that we might change our slices, right? But these, again, just are our slices. It's just displayed as numbers rather than as lines. So right here, I can see the current price of the stock, 10% above, 10% below, and then I can see other variables that are dependent on those assumptions. So let's assume that our stock price just stays where it is. 57.53 doesn't go up, it doesn't go down. Well, these are the current Greeks, current delta, gamma, theta, vega. We can also see currently stock's a little bit underwater, shows us our profit or loss for the day. It's showing us our buying power effect for the trade. But if I start to make changes to the assumptions for the trade, let's say we think volatility starts to rise. So time hasn't gone by, but volatility starts to change. Keep your eye on the profit or loss since we opened this trade. Rising volatility, I can now see it numerically. Each time I click that plus sign, we're going up an assumed 0.1% in volatility. And for sellers, that's negative. And I can actually see how negative that's likely to be for my trade right here. If volatility were to drop, I can see that being displayed and actually chipping away at the losses that I've already built a little bit since we first put this trade together about 30 minutes ago. So I can change variables and see them on my chart. I can also see them numerically right down here. Of course, we can build in time decay as well. So this is an out of the money vertical spread. When we sell an out of the money vertical spread, the stock is already where it needs to be, right? Our stock right now is at 57.50. That's kind of convenient, but yeah, that's where it is right now. We need the stock to be below 60 for this trade to work out optimally. It's already below 60. So if price is already where it needs to be, every day that goes by and price hasn't moved against us, that's good. Time should work in the favor of this trade, assuming price doesn't change. Let's test that assumption. Let's come to our price, let's come to our date. And I want to keep an eye on our PL open column here, profit or loss since we opened this trade. And let's just advance one day. Let's advance a second and a third and a fourth and a fifth and a sixth day. What do you see happening with our losses and now our gains just from the passage of time? As we're moving toward expiration, you can see actually our break even is moving toward the break even for our expiration date. You'll also see our profits start to rise toward the profit maximum for this trade. Yeah, time is working in the favor of this trade, and we can see that playing out numerically right there as we get closer and closer to our $55 profit. At the same time, it's calculating, well, what if we were getting the passage of time and we went up 10%? Or, oops, what if we got the passage of time, but we also dropped 10%? So that's what these other slice rows are telling us. Now, one final thing. I won't abuse you with too many tools here. I know that there's great depth. Actually, sorry, no, I am going to hit you with two more. Let's come back here and reset things. Let's I got ahead of myself. I was thinking of both things that I wanted to show. Let's hit the reset slices. But I did want to show you that you can quickly change the slices. We don't always just have to have plus or minus 10% or move them manually. Some traders just want to know, well, where's my break-even point for my trade? So we can just go to break-even. We can go set slices from this menu to break-even, and let's choose May 17th, and it just draws a line right there. So there's that slice. But the final thing that I wanted to show us, let's come up here and just hit reset for everything again. All of this that we've done so far is just on one trade, and that's kind of nice. But wouldn't it be cool if we had a chart that would tell us whether we're trading options or even if we're trading stocks or a combination of stocks and options? I wonder how an entire portfolio would be likely to perform if, let's say, the S&P were to go up. Have you ever wondered that? Have you ever wondered what the relationship of maybe, I don't know, your 401k or whatever might be to the S&P 500? You look at the S&P, it went up 1%, and you go look at your 401k, it only went up 0.7%. What's going on there? Well, the S&P is only an estimation of how stocks or other investments are likely to perform. This tool actually uses historical data, historical relationships between the S&P 500 and equities or options to project how a portfolio is likely to perform if the S&P were to move. So here's what I'm going to do. First thing I'm going to do is change this from just displaying a breakdown of a single of the trades on a single symbol. Let's change that to an entire portfolio. Now you'll notice it says a portfolio that's been beta weighted. In other words, beta is a position's relationship to the S&P 500. So it takes historical relationships and builds those into a prediction for how a portfolio is likely to perform as the S&P floats up and down. So let's choose that. But then, right now it's benchmarking actually against Nike. I'm going to benchmark against the S&P. And I've been saying the S&P all along, but we can actually benchmark this against other possible benchmarks. The NASDAQ, if we have lots of NASDAQ securities in a portfolio, for example, or the Dow or whatever, if we're kind of more blue chip. But now what we're looking at is a profit or loss scenario based on where the S&P 500 is right now, and assumptions of what if the S&P were to go up or down. I can now see how a portfolio is likely to perform under those assumptions. So this portfolio right now is actually, like most portfolios, this example portfolio is underwater so far, down to the tune of about $13,000. However, if the S&P rallies, our losses shrink until we hit a break-even point, and then beyond that. Now, these are estimations of how the portfolio is likely to perform. They're not going to be precise, but they're pretty good, generally speaking. So this is a pretty nice tool. Again, we could have used a different benchmark, but to load this up, we just change this to portfolio beta weighted and then make sure that we've selected our benchmark up here. But guys, this is the risk profile tool. If this is your first exposure to it, I know there can be a lot to absorb here. You might want to get into your paper money and just experiment with a trade. See if you can break it down, see the profit or loss potential at different times, play with the variables of price and time and volatility, see those play out on a chart, see those play out in the numbers, and then maybe have a look to see for an entire example portfolio, how it might perform. But if you enjoy this sort of stuff, this is what we do on Wednesdays. We talk about how to use Thinkorswim and its powerful tools. So I hope that you'll put it in your calendar to join me for getting started with Thinkorswim. This one, yeah, goes maybe a little step beyond getting started, but the tool exists. I wanted to get into it. John, glad you found good value in this webcast. Maybe I'll ease off the throttle a little bit, get into something that's might potentially maybe a little less niche next time. But thanks for giving me your time today. I want to give you a reminder of the resources that you have available. If you have subscribed, that's fabulous, to the YouTube channel. If you haven't done that yet, make sure you go down below the video stream and click on the subscribe button. That subscribes you to our channel. It doesn't cost anything, but that's where you'll find our playlist for previous webcasts, and you can join our live streams here, but you just track us down on YouTube, Trader Talks Schwab Coaching Webcasts. Another thing that Kevin and I would both like to invite you to do is to follow us on X. If you have an account with X, follow Kevin there at Kevin Horner CS. Follow me there at Cameron May CS. Always make sure you're being precise with these handles because there can be similar handles that are not us. So yeah, at Cameron May CS. But yeah, best place to connect with me in between the live streams. Thank you to everybody that clicked the thumbs up button. That's always appreciated. It looks like we've had 33 people already click that like button. Do that if you enjoy a webcast. Click the thumbs up. It's applause to your presenter, and it gives their webcast a boost in the YouTube algorithm. All right, time to go fill out that survey. Thanks for reposting it, Kevin. Everybody, I will see you again next. No, I'm not going to see you next Wednesday. I'm going to be on vacation. Somebody will be here talking about getting started with technical or with Thinkorswim. But I will see you in tomorrow's webcast. I'll see you on Friday. I'll look for you on X. Whenever I see you again, until that moment arrives, I wish you the very best of luck. Happy trading. Bye-bye.